Hi everyone, this is John Sneisen for World Alternative Media here, and once again we're joined by the all and fantastic Tim Picciott down in the beautiful place of Phoenix, Arizona. And Tim is going to get into an article for us right away here, which has some serious complications and things are really going down. It seems in the auto market. Tim, if you could just get into the article for us.
Yeah, so here we have an article from money.com where it shows a record number of Americans are defaulting on their auto loans right now. And economists are worried. Imagine that, something where economists goes on to say a record 7 million Americans are 90 or more days behind on their auto loan payments, according to a study from the Federal Reserve Bank of New York. That number is a million higher than the total at the end of 2010, a time when unemployment rates hit 10%. And delinquency rates were at their worst, notes the Fed. At the time, 5.3% of auto loan borrowers were 3 months late on their payments. Now the share is slightly lower at 4.5%, due in part to a growing number of people taking out loans to purchase a car. And then it goes on to basically say that, paying your car loan is usually, the very first thing people go on to pay. So, but then, I have seen other articles where economists are trying to say, well, it's actually not that bad of a thing. It's actually a good thing because, whatever mental gymnastics we're going to use. But, what does this tell you, John, that we're seeing, a record amount of people 90 or more days behind? I mean, we're not talking, or 4 or 5 days behind. We're talking 90 days behind.
Yeah, this is like complete foreclosure in the real estate market, right? When you basically are so far behind, you can't. They're not paying their loans, most likely. A lot of these people, and if you take a look at this chart, which is the transition of auto loans into serious delinquency by credit score, you can kind of see how the actual charts are, they're moving up and getting closer and closer to the 2008 levels on all different types of credit score. So that is a pointer that we kind of hit peaked at. Well, we really hit it back in 2017, 2018 when this first started to happen, Tim, and I know you covered it in great detail as well. And this is just again, people really can't afford their to pay their debt anymore, and this is a serious problem.
And can I
course,
just interject
yeah.
so that way people can see what they're reading
Yeah,
here on the screen? So we've got this light blue line, and that is a credit score of 620. Then we've got the red line, which is 620 to 659. And then we've got sort of like a gold color that's, we're starting to get into the better credit, 660 to 719. And then we've got another blue line. I don't know why they use, all the colors. And we got two blues. But for whatever reason, that is 720 to 759. And then in silver, we've got 760 plus. So you can see that obviously that makes a super, super small amount of the percentage, because if you've got 760, you're probably just paying for it in straight cash. But as John was alluding to, we see, a lot of people at 620 and below, a lot of people at 620 to 659, especially that one is, you do see that starting to climb. So I just want to make sure everyone out there could actually knew what they were looking at with that chart.
No, for sure. And if we then talk about that, the lower credit scores, which is the blue one, which is subprime, which bankers looks as highly risky that could default. We're seeing, let's take a look at how that is, according to different sectors of lending. If you take a look at the auto finance sector, which has 50% of it being subprime, which is a lot, and I think we're going to see a lot of problems. We're actually going to cover a little bit later in this video about the actual derivatives on all that debt. And then you have captive, which is 19%. The credit unions has 14%. Subprime, you're looking at the large bank, actually pretty high amount, 23%. And then the small banks that are under 50 billion in size has 14% subprime. So there's a lot of subprime out there, but of course the auto sector is by far what it looks like could be a potential, dynamite that could go off here, something that could blow up, kind of like what happened with the housing sector, and what I shouldn't be laughing about that, but a lot of people today also live in their cars because they can't even afford in the big city, a lot of the bigger cities like San Francisco and others, because they can't afford to live in a house. They live in their car, and their car is their house. So you're
And
looking at
there's
a lot of that.
literally too much crap on the street in San Francisco to even live on the streets there. So you've got to, have some sort of vehicle to live in. And another crazy, at least like
Yeah,
with a house, theoretically, as long as you're doing some upkeep and maintenance on it, it's, relatively speak, at least there's some, at least it's not always depreciating. Whereas a car, you've got basically, 100% chance of it depreciating right after you buy
yeah,
it. Unless you're, doing something where maybe you're buying like a higher end exotic car that you're keeping as a collectible, but obviously
yeah.
that's far and few between, and those people aren't worried about this. But another thing that's a really weird thing that's going on is I have a neighbor across the street where they couldn't sell their house. Now they actually sold their house to Zillow. And so now Zillow actually owns the house. I think they're doing something with a mortgaging of it as well. And so you're seeing companies like Zillow where they're trying to take over the entire aspect, the entire pie of everything. And it's sort of like, ringing the bell to the top type moment where, it's like, oh, what could possibly go wrong? Where now we have a company that started off, simply listing a direct, sort of like a competition to the MLS system where you could see, what houses are going for. Obviously it's not, super accurate, but, I can see potential ways where Zillow could be getting themselves into trouble, but I hadn't actually seen any houses that they own until boom, I had one pop up just like about two or three doors down from me. So sorry about interjecting with that. I know it wasn't one of the planned things we were going to talk about, but I'm always good for having ADD and jumping in different directions.
Yeah, yeah, no worries, Tim. But it's important what you mentioned, and this is very interesting. When you're talking about Zillow, of course, having issues with well, are starting to become a kind of mortgage broker almost. But what we also saw back in 2008 was that hedge funds, like I believe it was BlackRock or Blackstone. I forgot. Tim, help me here. Which one of them is the actual hedge fund here?
Well, BlackRock is the largest
Yeah,
asset manager in the world,
yeah.
and Blackstone is the
So
hedge fund. And it's funny because
yeah,
actually
exactly.
the neighborhood right next to me is called. And actually, now I can't remember which one it is. BlackRock is actually a neighborhood that's like a quarter mile from the house as well too.
Yeah,
So,
yeah, that's funny. But anyways, so Blackstone bought a whole bunch of these delinquent foreclosed houses, and what they did is they then rented them out again. So a lot of people have had actually the hedge fund as their landlords, and that hasn't been very well received a lot of places. I know there's been so much complaints about that, but of course that's what happened. So they actually bought up all these foreclosed homes and then they sat on them. But again, let's get back to the of course the auto bubble,
especially where I'm at, like Phoenix and where Josh was at. Well, not currently, but when he's residing in Vegas. I mean, Vegas and Phoenix were basically the two biggest epicenters of this going
yeah,
on. So I was trying to buy a house in 2000, and that was 2011 or 2012. Can't remember which. 2012 went to go buy a house here, and at the time it was crazy. Like you were, I was probably 25 years old at the time, so obviously I didn't have the cash pile and the credentials that all these other buyers were. So I couldn't even compete on trying to gain in these houses because as soon as they'd come for sale, because they were so massively undervalued at the time that it was literally hedge funds, like you mentioned, coming in and scooping up everything. So we actually had to go out and get a new build. Then, so I mean, we managed to get in within like a month or two of the market low, or maybe within like weeks of it, and actually sold out last year. So hopefully we timed that one okay. And but who knows? All the money printing, maybe the housing values will keep going up. Odds are the car values will not keep going up.
yeah.
Appreciating assets.
Yeah, exactly. And you were mentioning in the article actually that they were lending against their cars, and that's called a car title loan. That became popular back in 2017, I believe, both in Canada and the United States, where you take out. Think about it. We were talking about houses, so you take out a home equity line of credit on your house, but now you're doing it on your car, which is a depreciating asset. What a crazy risky bet on taking out debt against your car, which is completely ridiculous, Tim, and it's kind of scary. But that should bring us to the actual next thing that we're going to talk about, and that is how, of course, these banks are using these assets again. You remember in 2008 where they packaged these loans, $30 billion worth of loans, the bad subprime loans, and then they shipped them out to pension funds as AAA rated investments because that's the only way that pension funds can invest in them. That just brings us to,
And
of
to
course,
your
yeah.
countrymen in Norway too, wasn't there like a famous like Norwegian pension case that bought a bunch of this crap?
Oh, there was several. There was, I believe, it was 3 or 4 pension funds, and it was what do you call it? It's RM pension funds in Norway that were for the RMs, which we have. We don't have, of course, counties, but they have the RMs, and they actually bought into a whole bunch of these collateralized debt obligations. There's still a lawsuit going on over those CDOs, and they blew up. Yeah, they lost all their money basically through those stupid investments that they made. And what we're seeing now, of course, is like, is there any of these assets getting issued anymore? People are saying that, oh yeah, they're not around anymore. Well, let's take a look at that, because we pulled up some information here from SIFMA. And Tim, if you could just quickly just explain to the audience what SIFMA is.
SIFMA, of course, I don't have the acronym right in front of me, but it's like the Securities Industry Financial Market Association, I think. I'm just going to kind of wing that one. But, just industry, group, that's regulating themselves. And so I'm not sure how much you want me to take the lead on this one, because this was your chart. But,
Yeah, no, yeah, I could go into it, of course. I just wanted to have you explain what the name was for. And it's basically another kind of regular or entity out there that just looks over all the financial data out there and make sure that nothing bad happens in the economy. Well, if we take a look at these, and instead of the collateralized debt obligations that blew up that we just talked about in Norway and everywhere else in the world where they had invested in these pension funds, they have now something. Well, they had it for a while. They've been
Well, and
issuing
one of
actually,
them,
yeah.
and actually one of them, I do remember. I think it was like Senator Cohen was grilling the Goldman Sachs CEO, and all this stuff was going on. I think the deal was called Timberwolf. So I'm pulling up on my screen
Yeah.
right now where
No, that was Timberwolf. Yeah,
where he
I
asked,
remember
and
that.
I'm quoting right now the senator saying, "How much of that shitty deal did you sell to your clients?" And so that was
Yeah.
Goldman Sachs. So their own even internal memos and emails were basically saying, "We need to get this shit off our books." That's their actual words. So yeah. So sorry for jumping in there.
No worries at all. But that's what it is, though. What they do with these asset-backed securities or collateral debt obligations, they basically package and stack them in tranches, and they could have a lot of really bad, triple B rated debt in there, or yeah. So they have a lot of like bad assets there, but then they have a couple of top tier assets maybe that they put in there. But the problem is that most of the actual asset-backed security is potentially full of these bad assets, not what they rate against, only the top few little in the tier there. But what's interesting is when you look at the asset-backed securities, they actually started the first issuance of an auto asset-backed security was in 1985, and it was 900 million $900 million that was issued at that time, which is quite interesting. So they've been around for a while, these derivatives. But let's take a look at the actual derivatives and what has happened over the last years. And what you've seen is they haven't depreciated, they haven't started to disappear from the economy. They're actually increased in the economy, and until actually on 2018 quarter, the fourth quarter, you saw it top out at $1.61 trillion of these different loans. And of course, the auto loans are still growing, by the way. They're still growing here. Meanwhile, you have in the auto delinquencies, they currently are at the in quarter one of 2019, they're at $228.9 billion in outstanding asset-backed securities. So what you're seeing here is they continue to issue this, and also you see other asset-backed securities that have credit cards in them. They have equipment. There's others. It says I'm not sure exactly all the different categories under that, but then you got student loan,
Yeah,
asset-backed securities.
case having like depreciating assets like automobiles, credit cards, student
Yeah,
loans. What great things to back something with. Let's just throw in another category because we don't
yeah.
want we want to keep some legitimacy here.
Well, fantastic investments, right, Tim? And what they also show here is that they have collateralized debt and collateralized loan obligations. Now, of course, collateralized debt obligations have drastically shrunken, and they say, like, yeah, we don't issue too much of them anymore. They're still getting issued, but most of them now are what's called collateralized loan obligations, which is a derivative that get packaged where they package corporations and business loans into it. So it's just interesting. But what is really interesting is, and maybe you could make a comment on this, Tim, is the quarter four in 2018 versus the first quarter of 2019, where you actually see a sudden decrease in the actual amount of asset-backed securities.
Yeah, I was sort of like glancing this over because I got this right before we went live here, but in 2006 it was also at 1.6 and then went to 1.9, and then in 2007 2000 so the transition from '07 to '08 is when the first time you started seeing this drop. And so right now we're seeing it start to drop again. So could that be another ominous sign? And when you take a look at like ultimately like what they're doing, like sort of in layman's terms, obviously we probably got a lot of guys that watch this, but it's like if you're in college and someone is saying, hey, we're gonna go to this party and there's tons of girls there, and then maybe they list like one girl that's like really hot, maybe she's like an 8 or 9, but then really it's like all these girls that are like super not attractive at all. And so like what this whole CDO thing is, like you're maybe like on the cover, like, or they show like the one hot girl that's going to be there, but then when you get there it's like a bait and switch, and it's a whole bunch of I don't even want to name names, but then it's just all these pigs that are out there, and that's sort of like hey, but if we get enough ugly girls together in one spot, then all of a sudden throw in some booze, and all of a sudden those girls will be hotter or something. And so maybe that's what they're doing with all these. Hey, we just take enough crap together that maybe people that will just have so many pages of crap, and we'll have basically a phone book here, and no one's going to take a look through this entire phone book, and we're just going to go sell it to grandma's pension fund in Norway, and then we're even going to email and talk about how crappy of a deal this is. And then when it goes belly up, we'll just tell the Federal Reserve and whatever puppet we're controlling that the real reason that this happened is that you didn't give us enough power, enough oversight, and then we're going to get money for free, and then we're going to buy up all of our competitors and then own the entire system. And so the exact people that basically screwed everybody in 2008 are the exact people who benefited the most out of this entire deal, because all the big banks are even bigger now. All the everything that went on that was wrong. Like, oh, we got some Dodd-Frank, BS, bill to make things better. Well, who is Chris Dodd and Barty Frank? They were, I believe, 2 out of the top 3 recipients of mortgage, of the mortgage and banking industry lobbyists, gave more money to them than anybody. And the only other person who was up there on the list, and I can't remember, I'm just spitballing off the top of my head here, what the exact order of 1, 2, 3 was, but the other person on that list was a pretty relatively unknown senator named Barack Hussein Obama. So Obama was on the list of being one of the top recipients from like the mortgage industry of funds. And he also, you can trace him going back to the late 90s when he sued Citigroup to force them to have loans around these certain areas or certain redistricting that was going on. And then you've got the same thing going on with Bill Clinton, when Bill Clinton was the one who helped in 1999, I believe is when they got rid of the Glass-Steagall Act. And I'm trying to think of the guy's name right now. I think it was Robert Rubin over at Citigroup as well. So Robert Rubin was, he was the Treasury Secretary, I believe, before Hank Paulson. And what was going on with him is that he was essentially in there as a lobbyist for Citigroup. They helped they helped deregulate Wall Street. And then when everything blew up underneath the Republicans, and I'm a anarcho-capitalist. I hate both of these guys, but it's just that it's always one side getting the blame for everything. But it's just amazing, sort of tracing the lineage of how all this stuff happened. But it was really Barack Obama and Bill Clinton had their fingerprints over all of this. And I do have a video on my BitChute account underneath the Liberty Advisor where you can actually go on and you can check out this video that I made, basically detailing how how the Democrats really were responsible for a lot of what happened in 2008. And believe me, I despise the Republicans, so I'm not trying to, give them a free pass or anything. But are you still with us, John? I saw your.
Oh yeah.
Okay, because it looked like what the
Yeah.
I was kind of rambling there because I saw like your picture isn't up anymore. So maybe you're
Oh, can
maybe
you see me?
no, it just says World Alternative Media when you're logging on. So
Oh,
maybe that
hold
might be
on.
a good. Maybe that might be okay. We're
There we go. Yeah, sorry, it was my battery is starting to get low. Uh, anyways, so yeah, no, it totally is. It's just about lobbying and then letting the financial industry get away with selling this garbage out to the general public and the dupes that they are. Of course, the pension fund managers is some of the kind of the lowest rank of people that they actually like these fund managers. The best people is at Wall Street, while they get the worst people there, of course, in the public sector. Dealing with a lot of these pension funds, but it's not only in the United States that they're issuing a mass amount of these auto-backed securities. Of course, Germany with Deutsche Bank, which of course Josh just recently visited the headquarters and was trolling around there. They are actually some of the biggest. Well, they are the biggest in Europe to actually issue asset-backed securities. And then, of course, you got France, which is the second biggest economy, Italy, Spain, United Kingdom. All of these guys are issuing derivatives on a lot of debt out there. So at one point, issuing all this debt, issuing all these derivatives that you have, debt backing, at what point are we going to see because people are not able to pay their auto loans, at what point are those derivatives going to fail, and who's holding the bag on those auto backed securities, or the asset backed securities that cannot be paid, Tim? That is going to be the question coming up, and the very near future. What I think anyways, I don't know how much longer they're going to pull this off, but what we're going to see is probably some kind of thing that, like, out of this, like especially the auto problem that they're talking about, that could be the new collateralized debt obligation that blows up. It's the auto-backed security instead of the collateralized debt obligations, and potentially also the collateralized loan obligations in the corporate market, which we talked about before. A lot of zombie corporations that really can't pay their debt, so they're just paying the interest on their debt. They're not even paying. And then on top of that, you have zombie nations. So there's a lot of debt that is not going to get paid unless you
and you
print
have
a
zombie
severe
debts.
amount. Yeah.
You got zombie
Oh,
debts.
banks. Yeah, of course. Yeah. Like Deutsche Bank. Of
And
course. Enough.
meanwhile, I mean, what are we talking about when it comes to Deutsche Bank? I mean, this is an absolute. I mean, even as Warren Buffett called it, derivatives are a weapon of financial mass destruction. And so, with all the calamity you could have going on at Deutsche Bank, all the different things you could be investigating, what are the chair of the Finance Committee in America investigating? By the way, the chair is Maxine Waters, and one of her underlings on that chair is Alexandria Ocasio-Cortez. So, like, literally, my actual industry, the two top dogs basically of like most influential people governing what I'm allowed to do is Maxine Waters and Alexandria Ocasio-Cortez. I mean, if you don't need a better argument for anarchism right there, then I don't know what. But right now I'm sharing an article where it shows, speaking of Deutsche Bank, speaking of everything going on, Trump sues Deutsche Bank and Capital One to block release of financial records. So, here we are, fiddling as Rome burns, that we're just trying to drum up, and obviously, was all the laws are on the book. No matter how clean you're trying to be, the average person I think commits 3 felonies a day. So, if they wanted this, they're just trying to hang this over his head. There's plenty of stuff that I criticize him on all the time, but all this, let's try to, and they've got Maxine Waters of all people, who is the one trying to dig up dirt. I mean, wasn't her husband the one benefiting from like all these like insider trading deals of between her and I forgot the other one out in California, but it was
Oh, really?
Lucy.
Does that happen in Washington?
And then they had a bill where they're going to try to stop insider trading, and it was actually called the Stock Act, where it was stop trading on congressional knowledge, so stock. But so on the surface, you're like, great, this is I can't believe that they were allowed to insider trade. And then you go and read the bill, and basically the bill basically legalized it while making it sound like it didn't. And I believe the main co-sponsor of that was I think it was like Louise Slaughter out of Rochester, New York, that's where I was living at the time when this was. So I was a lot closer. So I'm always like near the border. So before I was near the border of Canada, now I'm near the border of Mexico. So I've always got like some quick escape route out of the USSA if I need to leave on a moment's notice. But yeah. So here we go. Yeah, Trump blocked. It's just absolutely fiddling with Rome burns. There's so many issues that you and Josh talk about that are so important. But what are the big issues we're going to talk about? Donald Trump, may have done something at some point with some of his money, and that ball, nobody gives two whats about everything Deutsche Bank has done to completely put this entire financial system on the brink of potential collapse.
Well, yeah, I think this is just basically Deutsche Bank saying, like, can you please save us? We're willing to do whatever we can to be bailed out, because just recently me and Josh reported on how Commerzbank and Deutsche Bank, the merger is kind of hitting some serious stumbling blocks, because both banks are useless over there in Germany. Both of them have lost 30-40% already just over the last year. What we're seeing is, of course, the oversaturation of debt in the economy. And this happens, you got the business cycle, whatever cycles it is, it's debt cycles. And this happens throughout history, where you have mass accumulation of debt to a point where there's nobody else more to lend out to that could, increase and pay off that ever increasing interest that doesn't exist. And that's what you're seeing here. We saw peak saturation probably back in 2017, 18. And then now we're kind of seeing the issue coming down here, where people are getting seriously delinquent. They can't pay their mortgages because of inflation, because of everything in the economy that they're getting constantly stolen from. It didn't help with the tax relief that they got. Of course, a lot of the middle class in the United States, you're still seeing mass amounts of people really struggling, and it's because of this printing of money that is constantly decreasing in value, and people that are holding this is having less and less money, and that's what you're seeing. One of the reasons here that you're seeing this delinquency, Tim. I just before we end this whole thing, I wanted to just, of course, mention some important things here, and that is, of course, a lot of people don't understand that they buy their house, they buy their car, and so on. And when you go to the bank, they actually think of it as an asset, which is not. It's really a liability, unless it actually gives you money back into your pocket. If you rent out your car for some reason, you get more money back than you actually are getting for that you're paying for it in your loan, or same with your house. It's not an asset, guys. And this is,
I actually do know somebody that is doing that, where there's a new app, I've never used it, called Turo, like Turo.
Oh, really?
The guy's got a Maserati, and the money he makes from the Maserati renting it out is actually covers more than covers the payment. Now I don't know if
Right.
depreciation and other stuff, how it works out, but yeah, so apparently some people are doing that, but it probably only works on the higher end cars, and you've got to deal with that too. So
Yeah, no, for sure. Well, I was thinking maybe they could create some kind of Airbnb for cars, where you rent out your car that you can't pay your loan, so you might as well give it to somebody that could pay it. But the problem is, like, a lot of people can't pay their loan, so it's not going to really work in that point of view. But anyways, I think we should wrap up here, Tim. And I just want to mention, of course, that we have a promotion code to a couple of things. And of course, it's Anarcho Vegas that's coming up. And I know you're probably going to be there, Tim, as well, and be speaking. So we very much look forward to that. So we have a promo code WAM for that, with 10% that you can get off the tickets. Same with the Red Pill Expo that's coming up very soon, in just a month from now, in Connecticut, in Hartford, Connecticut. Then, of course,
your conference as well over in Winnipeg. You got
the conference that's coming up in Winnipeg. I'm getting very close to actually launching on that, which is going to be a crypto, blockchain, and alternative money conference. So you very much got to look forward to that as well. There's information coming out on that within the next 2 or 3 weeks that is going to be super interesting and very exciting for everybody to come as well. And then we have our affiliate with, of course, the great Mike Maloney. So check out that below as well. And last, I want to just mention our Subscribe Star, which is special content that you could subscribe, you could sub to it, and then you pay a little bit of money, but we actually put out some special reports there for the people that we take a little bit more time than on one of these regular reports to cover some really important things and aspects, and maybe dive a little bit deeper into looking at some issues in the economy. So definitely do that. And Tim, again, it's fantastic to have you on with your insight, and just have some final words about this auto crisis, Tim.
Yeah, I mean, I'm just like everyone else, surprised at how long everything is taken to unfold. In terms of Anarcha Vegas, not sure if I'm speaking there. Originally, I was
Oh,
asked to speak,
sorry.
but then they ended up getting another guy who maybe you guys might know of, G. Edward Griffin. So I think Ed kicked me out because I'm like, okay, well, if I'm going to be, because the financial, spot, ended up going to Ed Griffin. So I'm like, okay, well, if you're going to be pushed out by somebody, pretty good person to be pushed out. So obviously not worried about that. But I will be, come from Phoenix. Will be a short trip over there. So I do plan on seeing you guys out there. I know, not sure if you're going to be there, but I know Josh obviously will be there. Will not be able to make it to the Red Pill. So hopefully see you guys at Anarcha Vegas. And another thing going on, if you guys want to head over to thelibertyadvisor.com, I am a financial advisor. I am taking on clients in the U.S. And so if you are close to retirement, or maybe if you want, crypto and retirement accounts, or maybe it's like, hey, I've got this, nest egg set aside. I need to make sure that it doesn't, go down in some either deflation or that I'm have my purchasing power protected in some sort of hyperinflation. How do you go about doing that? I have all sorts of, experience regarding that. We have different boom bust portfolios that we run that really is trying to take advantage of these things. And I'd invite you guys to go and check out my podcast that will have links for below, where a lot of the stuff that just along with you guys that I was calling before it happened, telling people what to do. And so a lot of advice that you guys can get for free, but if it's overwhelming and you want someone to help hold your hand and walk you through the process and give you financial advice along the way, that is something that I've been doing for over a decade. Actually, coincidentally enough, I started the day Lehman Brothers crashed in 2008. So great, welcome to the business. But no, thank you guys for having me. And I will be on as a regular contributor, although with all the shadow bang that's going on, some of you might just be seeing me now for the first time. And then, ultimately, some of you are complaining about the ads, and we would love not to have any ads, but it's the only way that we can, Josh is able to go over to all these different places. The only way he's able to, feed himself. And so, if everyone contributed, $1 a year, that would be, for Josh. But it's not just about having enough. It's about, getting other people, getting other reporters,
Exactly.
branching this out. And, even the people like, Alex Jones, operates off, probably like 10, 20 million bucks a year. But compare that to somebody like, CNN that operates off hundreds of millions. And what you and Josh have been able to do off, essentially a shoestring budget, is really remarkable. Dollar for dollar, it's sort of ridiculous, all the reach and influence you guys have. But now Facebook is shadow banning, demonetizing,
Yeah.
sure that content isn't even given out. So ultimately, I think it's going to make this space a lot stronger. And so by investing with myself, at that point, I'm hoping to sponsor you guys as well. And so we got to create these win-win-wins all the way around. And unfortunately, the traditional model of going through YouTube and getting views and getting revenue that way is not really a viable long-term option. So we really do need the support in the intermediate run. But thank you guys for having me on. It's definitely a big honor to be a part of your crew. And until next time.
Yeah, you're more than welcome, Tim, and it's always a pleasure having you on. This is John Sneisen and Tim Picciott signing out from World Alternative Media. Find the truth, be the change.